Welcome, curious minds, to another deep dive. Today, we're plunging into a topic that touches, well, pretty much everyone, the residential real estate market. It's fascinating. In an age where you can get an instant cash offer for your home, almost like ordering pizza, and AI is predicting future sellers years out, the average home seller is still 65 years old and seems to crave trust more than anything else. Today, we're unpacking a really insightful strategic playbook. It reveals how online marketplaces, predictive AI, and these instant buyers are radically reshaping real estate. But it also creates this interesting paradox about what truly closes a deal. So think of this deep dive as your shortcut to understanding these big strategic shifts happening right now.
Okay, let's dive straight into the heart of this transformation then. Our analysis highlights three fundamentally different ways of approaching sellers. Each one kind of represents a distinct era or maybe a different philosophy in real estate. The first, and probably the most familiar for many, is Zillow's model. This really embodies the now economy of real estate, right?
It's all about grabbing attention at that exact moment someone shows intent.
Precisely. Yeah, Zillow is brilliant at gathering those warm leads. Someone's actively clicking, browsing, doing things that signal they might be ready to sell or buy soon.
Yeah.
And then they package these leads up
Yeah.
and sell them to agents. The immediacy, that's the big draw.
Right. But what's the catch? What's the trade-off for getting that immediate lead? Our sources paint a pretty clear picture there.
Well, yeah, they're immediate, often highly motivated, which sounds fantastic on the surface, but they come at a pretty steep cost. We're talking typically between, $200 and $300 for each lead? And maybe more importantly, they're almost never exclusive.
Okay, so you're competing.
Exactly. Agents are often in this frantic race against the clock. You basically have to respond within minutes because maybe 5, 6 other agents got the very same lead. And all that competition, it just drives conversion rates way down. Often it's like a mere 1-2%, which makes profitability incredibly tough, really challenging unless an agent is, one of those high-performing transaction hunters with an absolutely ironclad follow-up system.
Okay, so that's the immediate gratification, high cost, high competition world of Zillow. But then our sources pivot to something, well, fundamentally different, TimeToSell.AI. How big of a shift is this predictive AI? What does it actually do compared to just buying that warm lead?
Oh, it's a complete paradigm shift, really. Think of it less like reacting to a signal someone just sent up and more like precision farming for potential sellers down the road. Instead of waiting for a homeowner to declare their intent, raise their hand, TimeToSell.AI uses predictive artificial intelligence to anticipate who might sell months, sometimes even years in advance.
Wow, that sounds almost like a crystal ball. How on earth does it manage that?
It's not magic, though it feels a bit like it. It's data science, pure data science. The system crunches these huge data sets, property characteristics, mortgage history, insurance flags, tax status, even demographic shifts in an area. It builds this probabilistic model. Essentially, it's making a highly educated guess based on patterns and data points, identifying who is statistically most likely to make a move down the line. And here's the really game-changing part. These leads are dramatically cheaper, often just $7 to $15 each.
$7 to $15 compared to $200 or $300.
Exactly. And crucially, they are exclusive to the agent. Now, the timeline is longer, sure. Conversions typically take anywhere from 3 to 24 months. Which means you need a totally different approach, much more relationship-focused, trust-based, rather than those aggressive sales tactics.
And the material really emphasizes these market signals. This isn't just giving you a name and address, is it? It sounds like it tells the agent why this person might be thinking of selling. Can you give us a couple of examples of what those signals look like?
Absolutely. And that why is so critical for making, empathetic outreach. So, for instance, a trapped equity profile might flag a homeowner who has, say, 70% or more equity built up, but hasn't refinanced in maybe 10 years. They could be sitting on significant wealth but feel kind of stuck. They might be prime candidates for downsizing or making a lifestyle change.
Right, so an agent could approach them consultatively?
Precisely. You could say something like, many homeowners in your situation are exploring options to unlock that equity. Have you considered what that might mean for you? It's helpful, not pushy. Or another signal like uninsurable roof could suggest an upcoming forced move because, their insurance company is putting on the pressure due to an old roof. It gives agents a genuine value-driven reason to connect, not just a cold call.
Okay, so we have the immediate needs Zillow model, high cost, high competition. Then the long game, predictive AI of TimeToSell.AI, low cost, exclusive, but requires patience and nurture. Moving from immediate to maybe frictionless? Our sources then spotlight that third disruptive force, Opendoor and other iBuyers. This model, it seems like it just bypasses the agent altogether in many ways.
You're absolutely right. iBuyers come in and offer an instant cash offer, usually with very flexible closing terms. They appeal directly to homeowners who prioritize certainty, speed, and simplicity above everything else. It really does feel Amazon-like, doesn't it, that frictionless experience? It removes the headaches of showing, staging, marketing. You know, kind of like ordering your groceries online versus dragging yourself through a crowded supermarket on a Saturday morning. That level of convenience, it really shifts people's expectations.
But there's got to be a cost to that convenience, isn't there? It can't be that simple without a catch.
There usually is, yeah. And it's often a bit hidden, or at least not emphasized up front. While it's super attractive for its ease, sellers using iBuyers might net, say, 5% to 15% less than they likely would on the traditional open market. Think about that. On a $400,000 home, that could easily be $20,000 to $60,000 in lost proceeds.
Wow, that's a significant chunk of change.
It really is. It's a substantial financial gap that the convenience factor often masks.
And if we connect this to the bigger picture, our analysis suggests these aren't just, minor tweaks in how things are done. They feel more like existential shifts for the industry. That's a really powerful point from the material. These iBuyers aren't just offering another service option. They're subtly rewiring how sellers think, what they expect. They've basically set a new baseline, a new floor for convenience. So even if a seller ultimately decides not to take an iBuyer offer, the mere existence of that super easy option forces traditional agents to work harder, to demonstrate much greater value, and really justify why the longer traditional route is worth the effort, usually because it results in higher net proceeds for the seller. The smart strategy isn't to just dismiss iBuyers, but maybe to use their offers as a clear benchmark to show that difference in the bottom line.
Okay, so with these three powerful forces, Zillow's immediacy, time to sell's prediction, iBuyer convenience reshaping the landscape, what does this all mean for the agents actually working in the field and for the brokerages trying to support them?
Yeah.
Our material makes it really clear that one size definitely doesn't fit all here. It talks about different agent personas. Indeed. It's really about understanding how different agent styles and personalities align or don't align with these new lead sources. For example, you've got the hunter. This is the agent who thrives on high volume, speed, aggressive follow-up. They love the chase. Zillow's immediate competitive leads. That's kind of their natural habitat. They're built for that race against the clock.
Right. And then on the other end of the spectrum, perhaps, is the referral anchor. How do these new models work for someone like that?
Yeah, the referral anchor is totally relationship-driven. Their whole business is built on trust, referrals, long-term connections. Zillow's environment, that sort of cutthroat, immediate pressure, can feel really unnatural, even off-putting to them. But predictive leads, that's where it clicks. It aligns perfectly with their strengths. Imagine that agent, armed with a specific market signal for, say, that trapped equity homeowner, sending a personalized note or making a thoughtful call, not demanding action, but offering insight, building trust slowly over months. That's right in the referral anchor's wheelhouse.
I can totally see that. Okay, and what about the farmer? The agent who really focuses on a specific geographic area, their farm.
Yeah, for the farmer, predictive leads are like, well, precision farming, just like the term suggests. Instead of doing blanket mailers or ads to every single home in their neighborhood, they can use something like TimeToSell.AI to pinpoint, say, the 10% of homes most likely to sell in their target area over the next year or two. This drastically cuts down marketing waste and seriously increases their ROI by focusing effort where it's most likely to pay off.
And maybe think about the rookie agent, too. They're often really cash-sensitive starting out. Zillow, with its high lead costs and low initial conversion, can be a huge financial burden, maybe even sink them. Predictive leads, being so much cheaper and having that longer nurturing period, offer a much more affordable training ground. They can build skills and confidence without that immediate, intense financial pressure.
Okay, this brings up a really important question then. How do these different lead models actually stack up financially for an agent? Our material provides some truly stark comparisons on this. They really do. The numbers kind of underscore this whole shift. Let's look at it. Zillow leads, right, at $200, $300 each. Even if you're a strong agent hitting a 2% conversion rate, which is pretty good for Zillow, your cost per signed listing can easily be around $3,300. It's a big investment for each deal.
$3,300 per listing just in lead cost acquisition. Wow.
Yeah. Now compare that to predictive leads, costing maybe $7, $15 each, even with a more modest nominal conversion rate spread out over a longer period. The analysis suggests the cost per quality listing can come down to less than $1,000. Think about that difference. One successful predictive listing could potentially cover months of lead costs.
So the ROI potential is just fundamentally different. It's not even close.
Fundamentally different, absolutely. Over, say, a 2-year period, the projections show an average Zillow agent might get about 20 listings per year. But their return on investment might be pretty marginal unless they are truly an elite performer, consistently converting way above average. Meanwhile, a consistent TimeToSell.AI agent, someone working the system, could maybe see 10 listings in year 1, but with potentially a 10x ROI because the cost basis is so low. And that compounds, maybe 20 or more listings in year 2 for very little additional cost. It clearly shows that predictive AI seems to deliver safer, more scalable ROI across a much wider range of agent skill levels. It's less about pure hunting talent and maybe more about discipline process.
Okay, but it sounds too good to be true almost. The document also makes it clear that predictive leads aren't just some magic bullet, right? They come with their own unique risks. It mentions time exposure and consistency risk. What does that mean exactly?
That's right. It's not plug and play.
Yeah.
Because you're nurturing these relationships over months, potentially even years. Agents need to be incredibly disciplined, super consistent. Without strong CRM discipline, customer relationship management systems, tracking everything in structured, consistent follow-up, these long-game leads can just, fall through the cracks. They can decay silently, as the report puts it, just vanish.
So the lead was good, but the follow-through wasn't there.
Exactly, which means brokerages have a really vital role to play here. It's not just about buying the leads. They need to provide robust training, motivation, focus on developing narrative-based scripts that actually align with those market signals we talked about, and ensure agents are using consistent multi-channel touchpoints, calls, emails, maybe even mail over 30, 60, 90 days and beyond. It's fundamentally about changing agent behavior to actually capitalize on these longer-term opportunities. It requires a different mindset.
Okay, now here's where, for me, it gets really fascinating. The analysis suggests AI isn't just another tool, another lead source. It's actually redefining the very structure of the real estate business. It talks about brokerages becoming AI gatekeepers.
Precisely. And that's a recognition that scale really matters when implementing this stuff effectively. Brokerages, especially larger ones, have the resources, the capital, the tech infrastructure to implement standardized AI systems across the board. For lead scoring, maybe AI-powered content generation. Imagine personalized market updates drafted automatically by AI for every single lead in your database. And even using AI for agent coaching, like analyzing call recordings to provide feedback.
So it's shifting from just giving agents tools to embedding AI into the whole operational DNA of the brokerage itself, making it systemic.
Exactly that. It fundamentally shifts the culture away from total agent autonomy, that old, my leads, my style, stay out of my way mentality, towards more systemization. The analysis is pretty blunt. Brokerages that enforce AI-driven processes that build repeatable systems will significantly outperform those that allow chaos or just let agents do whatever they want. It leads to lower per-agent costs and higher overall margin retention for the brokerage. It's about building a machine that consistently delivers results.
And drilling down to the individual agent level, AI dramatically boosts productivity, right? It seems to turn raw lead volume into actual lead intelligence.
Yes, massive difference. Instead of an agent just getting a list of 100 names and trying to figure out where to start, AI can rank those leads by conversion probability. And crucially, it provides that narrative for each one, why they might sell, what their likely motivations are, maybe even how best to approach them. That's incredible efficiency right there. Plus, AI can automate things like drip email campaigns, help draft personalized messages, track engagement across channels. It even helps with the presentation side, offering AI-powered CMAs, comparative market analyses, and scenario forecasting. This allows agents to show sellers really clearly, here's what different pricing strategies could mean for your bottom line. It adds a whole new level of analytical depth.
The report makes that really bold, almost provocative statement we mentioned. AI won't replace agents, but agents who use AI will replace agents who don't. It paints this picture of a widening gap, doesn't it, between agents operating with this kind of surgical precision powered by AI and those still clinging to older, more manual, maybe less efficient methods.
It is a stark reality check. I think that's fair. The agents who embrace this technology, who learn how to leverage it, they'll just have an unparalleled advantage, not just in efficiency, but in the depth of insight they can bring to every single client interaction.
Yeah.
And yet, amidst all this powerful technology, all this data, our material constantly brings us back to the most crucial element, the seller, the human being.
Right. This is where that paradox we touched on earlier really comes into sharp focus, doesn't it?
Exactly. Remember that statistic.
Yeah.
The median age of home sellers in the U.S. is 65. Many of them are in that equity-rich, cash-poor situation. They bought their homes years ago, maybe decades ago, and what they value most, often, is reliability, professionalism, someone they can trust. It's not always about just immediacy or the slickest tech. They crave that human trust element.
So it creates this fascinating dynamic.
It really does. The more powerful and pervasive the technology becomes, identifying the right people, automating tasks, the more it actually elevates the need for authentic human connection at the crucial moments. AI can identify the right households, automate the background work, tee things up perfectly. But it's still the agent who has to deliver the empathy, the credibility, the reassurance that sellers, especially older ones, really demand. And this means thinking about multimodal outreach, right? Maybe traditional printed letters and phone calls still work best for baby boomers. Personalized emails might resonate more with Gen X. Digital-first engagement for millennials and younger generations. It's about meeting people where they are, with the right approach and the right human touch.
So looking ahead, say 5 years down the road, the outlook seems pretty clear from this analysis. AI is likely shifting from being a nice-to-have, a competitive differentiator, to being just baseline, table stakes. Predictive systems will probably become mainstream, and brokerages will continue evolving into these tech platform orchestrators managing complex AI systems for their agents. So what have we really learned from this deep dive today? It feels like the residential real estate industry is truly at a crossroads. You've still got Zillow offering that immediacy, which some agents thrive on. You've got Opendoor and iBuyers reshaping seller expectations around speed and certainty, setting that convenience floor. But our analysis strongly suggests the real scalable, sustainable, long-term opportunity seems to lie in the precision. And yes, the patience offered by predictive AI systems like TimeToSell.AI. So the path forward for you, the listener, maybe if you're in this industry or just watching it, seems to be about diversifying lead sources, definitely embracing AI as essential infrastructure, not optional. Learning how to smartly reframe the conversation against those iBuyer narratives by highlighting net value, not just gross offers, and above all, consciously working to elevate trust in every single interaction.
Yeah, the material's final thought really lands with impact. It's both simple and pretty stark. It says the winners of the next 5 years won't be the ones who just cling stubbornly to the past, nor will they be the ones who blindly chase every single shiny new tech tool without a strategy. Instead, the winners will be those who strategically balance the short term and the long term, who understand how to leverage AI alongside genuine empathy, who can master both speed when needed and patience when required. AI ensures the opportunities aren't missed or wasted, but at the end of the day, it's still human trust that closes the deal.
A really powerful thought to consider as you navigate this evolving landscape. Thank you so much for joining us on this deep dive. We hope this has given you a clearer, maybe more nuanced picture of the future of real estate.